What a wild housing market we have right now. Based on my own analysis of Realtor.com's data, we have some very interesting trends happening right now. This is actually my favorite video I make for you guys, and you guys seem to like it. My favorite video I make each and every week regarding the latest trends from Realtor.com. And just like my previous videos, I did not even read their analysis. Instead, go to Realtor.com /research/data. Click on this link right here. It takes you to this information in today's video. So today I'll touch on home prices. Again, some very big changes happening right now. Also going to talk about housing inventory, new listings, how fast or how slow houses are selling, and also the percent change in the number of reduced price listings. So with that said, I have a lot to share in today's video. Of course, I invite you guys to subscribe to this channel if you haven't done so already, because I post frequent housing market updates so you guys can make a more informed decision about whether to buy or sell a house, or if you're just interested in the latest housing market updates here. All right, let's go ahead and dive right in. Some very big changes here because for the week ended July 23rd, the median asking price on a national level actually increased by 0.2%. Last week it was flat, and before that we actually had 6 consecutive decreases on a year-over-year basis. And so much, in fact, for the week ended June 10th, we saw a decrease of 0.9% in asking prices year over year. And that was the biggest decrease going back to at least July of 2017, as far back as Realtor.com's data goes. One thing I do want to share, though, is my comment from 1 week ago. The video I made 1 week ago it was when asking prices were flat year over year. And I said here it's likely to be positive very soon due to the fact that prices dropped dramatically starting in June and July last year. And that prediction came to fruition because asking prices increased by 0.2%. That marked the first year-over-year rise since early June. The decrease in prices from a year earlier was, of course, short-lived due to the fact that prices fell much faster at this time last year. In my personal opinion, we'll likely see more positive gains in home prices year over year over the next several months, unless something drastic happens, such as mortgage rates skyrocketing or unemployment surging as well. However, I don't want to confuse year-over-year changes and changes on a monthly basis, because I do expect that home prices should decrease on a monthly basis for the remainder of the year due to seasonality and, of course, due to low affordability. I realize this may create some confusion regarding trends, so let me briefly share Redfin's data center, because according to them, home sold prices are up by 3% year over year, even though prices have been decreasing for the past several weeks. So in my personal opinion, we'll likely see home prices decrease for the remainder of the year, but we're not going to see this giant fallout in prices like we saw last year, because last year inventory more or less doubled, and of course rates basically doubled as well. Whereas this year rates are still very high, but inventory has only been up by a very small fraction compared to the start this year, which is drastically different compared to 2022. Okay, let's talk a little bit more regarding housing inventory, because last week that decreased by 8.6% year over year. That marked the 6th consecutive week in which inventory levels actually decrease. This, of course, is night and day difference compared to the giant gains of 50 to 70% that we saw in December last year through March this year. Also, the changes on a year-over-year basis for housing supply have been mostly on a downward trend ever since early February this year due to a lack of new listings. In other words, it's not filling up the bucket of housing supply. We're seeing a lack of people listed their house for sale, and from the fact that inventory was skyrocketing this time last year. In contrast, inventory is only slightly up year to date. And let me share some more trends regarding this, because again, inventory down by 8.6%. When looking at trends according to altosresearch.com, inventory's down by 10%. So 1 year ago, we had approximately 585,000 homes for sale. In 2022, this time, it was around 539,000, a decrease of 10%. Much different than the 76% gain on a year-over-year basis that we saw in late February of this year. So in other words, some very big changes happening in our housing market. Now here's something new I added here because I actually looked at the year-to-date changes in inventory levels this year. This is the change from the first week of January to the end of July this year. Compare the same time frame in 2022. So this year, there's only a gain of 14,000 homes for sale. So this is by the end of July compared to the first week this year, only an increase of 14,000 homes for sale. And that equates to only a 3% growth year to date. Now compare this to the same time frame last year at this time. Inventory increased by 247,000 houses for sale. And that was a giant increase of 85%. So year to date last year, inventory surged by 85%, whereas this year it only increased by 3%. So that of course is why home prices really started to fall off a cliff last year, whereas this year prices are decreasing, but not the same a sharp rate we saw in 2022. Also, inventory has been increasing very slowly ever since April. I'll show AltosResearch.com's chart regarding that, mainly due to seasonality and also due to falling demand from home buyers due to, of course, from high home prices and high rates as well. And also there's around 10% fewer houses for sale right now compared to the same time frame in 2022. But compared to pre-pandemic levels during the same time frame in 2019, we're actually down by about 50%. Therefore, we're missing approximately 500,000 houses for sale, which is absolutely crazy here. So as you can see right here, 485,000. Compare that to 2019 at 962,000. And also in 2018 in mid-August, it was 956,000. So we have approximately 50% fewer houses for sale right now compared to pre-COVID levels. Additionally, when looking at the past couple of years here, there's some very big changes here because let me just zoom in right there. So looking at this, because inventory levels to start the year last year went from 292,000 up to about 539,000, an increase of 85% from January through the end of July last year. Whereas this year we started at around 471,000 and now it has only increased to 485,000. And that equates to only a 3% rise year to date. And this, my friends, is one reason why I believe that home prices are not going to decrease at the same rate last year, but we will see a decrease due to seasonality and also due to a lack of housing affordability because rates have been above 7% for quite some time. So in my opinion, the direction of our housing market is going to depend on the balance between supply and demand. I also want to provide an update regarding the lack of new supply hitting the market, which is obviously one of the main factors why inventory levels for existing houses remained at very low levels. Because last week it decreased by 16.5% in the number of new listings compared to the same time frame in 2022. It also has been decreasing by double digits for 50 out of the past 53 weeks. This is crazy, right? We have basically new listings falling by double digits for nearly every single week for an entire year. On top of that, new listings overall have been decreasing for 56 consecutive weeks year over year, dating back to early July of 2022. Let's also discuss how fast or how slow houses are selling. Because last week it took about 8 days slower to sell a home compared to 2022. This is a new trend as well because for the past 2 weeks, this change is in the single digits. Last week it was an increase of 9 days, and that was the last time we saw single digit gains going back to mid-December last year. And also when looking at the change last week, a gain of 8 days. This is half the gains we saw back in May when days in the market was about 16 to 15 days slower. Okay, let's change gears slightly here and talk about price reductions, because the number of price reductions compared to 12 months ago was a decrease of 31.1%. This marks the 9th consecutive week in which we have year-over-year decreases according to Realtor.com here. This is also much different compared to the triple-digit gains we saw to start the year here. This negative percent changes here is likely due to two main factors in my personal opinion. Number one, due to low inventory levels. In other words, we're seeing fewer options for home buyers or fewer options of houses to buy by home buyers, leading to fewer price reductions compared to 1 year ago. And number two, price drops were skyrocketing at this time last year. In contrast, the share of price drops is more or less flat year to date this year. And let me share a chart of, according to altosresearch.com, because the share right now is at 34%, roughly on par with last year at 36%, also more or less on par with 2019 at 35%, and 2018 also at 35%. But 34% right now is still much higher compared to 2021 and 2020. If we go back to their report here from Realtor.com here, the reason why this number right here has been decreasing, I mean, look at this. Back in May 6th, we saw an increase of 35% in the number of price reductions. Now it's down by 31%. So very big changes here. And this is due to the fact that the share of price drops was absolutely skyrocketing in 2022, in early spring through more or less the fall months. Whereas this year, we haven't been seeing very much movement here, going from 29% now to about 34%. Whereas last year, the trough was about 17%. It increased to 36% by the end of July last year. All right, I know that was a lot to cover in today's video. So here's a summary, just like I make in each of these weekly updates I make for you guys. So number one, just as I predicted, asking prices in the US increased by 0.2%. That was the first year-over-year increase since early June this year. The decrease in prices from a year earlier was, of course, short-lived due to the fact that prices were falling much faster at this time last year. And by the way, for clarification purposes, I did not predict that prices were to increase by 0.2%. I said in my video from 1 week ago that we likely will see positive year-over-year gains in asking prices nationwide. And in fact, we did see that. Going from flat last week or 2 weeks ago, now it's an increase of 0.2%. Number two, housing inventory decreased by 9% year over year last week. That marked the 6th consecutive weekly decrease. Inventory has barely increased this year, only up by 14,000 houses for sale, a gain of merely a 3% gain here, compared to 85% last year. Also, new listings have been decreasing by double digits for 50 out of the past 53 weeks. The continued lack of new listings or new supply in the market is causing inventory to remain at historically low levels. There's still approximately 50% fewer houses for sale nationwide compared to the same time frame in 2019. Number three, this is something I did not mention though in today's video, but I will here. The average 30-year fixed rate was 6.8% this July compared to 5.4% in July of 2022, according to Freddie Mac. And by the way, that 6.8% average rate for July is nearly very, very close to the highest rates we've had going back to 2002. I'll probably share that in a future video with you guys. Number four, the share price reductions is roughly the same as last year and during the same week in 2018 and 2019. Of course, it's much higher now compared to 2020 and 2021 though. Number 5, houses are taking longer to sell compared to same time frame in 2022 for 52 consecutive weeks. Again though, this is a lagging indicator based on closed home sales. So what are some huge changes coming here due to the fact that interest rates are very, very high, and of course we have high home prices as well. So number 1, average 30-year rates are around 1.4 percentage points higher compared to the same time frame 12 months ago. That actually causes a 14% decrease in buyers' purchasing power. Also, there's lots of headwinds that home buyers are facing right now. For example, we have near record low housing affordability, low inventory levels of existing houses, and of course we have elevated rates. And a key word here, a potential for a recession, probably not until next year, potentially. And I say this because GDP grew by 2.4% annualized in Q2, beating expectations. We need to see 2 consecutive quarters of negative GDP in order to get into a recession. But one thing's for certain here, we do have a lot of uncertainty ahead in our economy and our housing market, of course, as well. Number 2, housing affordability is a huge hurdle for home buyers, especially compared to the past several years. Rates have more than doubled, and of course, home sold prices have increased by about 40% ever since 2020. Mortgage rates in general have been on the rise since April, and on a national level, home sold prices have increased by 9% year to date, according to my own analysis of Redfin's data here. So we have rising rates and prices, which of course is making housing affordability even worse. I should clarify regarding rising prices, we have an increase in home sold prices compared to 12 months ago, but home prices in general have been decreasing for the past several weeks here. But in my personal opinion, the trends we're seeing in our US housing market right now is definitely not sustainable. We should expect to see home prices to decrease very, very soon due to seasonality and affordability constraints as well. And number 3, early signs of home buying demand have been absolutely all over the place due to the volatility in rates so far this year. So for example, based on the most recent report from the MBA, which was reported on last Wednesday, applications for home loans to buy houses decreased by 26% year over year. When looking at pre-pandemic levels, their index or their purchase index, which of course is a measure of applications for home loans to buy houses, is on par with the lowest levels going back to December of 2014. In other words, home buying demand is still very, very low. Also, Redfin's most recent data shows that pending home sales decreased by 14% and new listings decreased by 21%. So in other words, we have low demand meeting low supply. Also, NAR reported on July 27th that pending home sales in June fell by 16% from June of 2022. However, new home construction sales, which is defined by a home builder accepting an offer from a home buyer, so that's really acting like a pending home sale. So for the month of June, new contracts signed actually increased by 24% versus a 16% decrease in pending home sales of existing houses. So home builders right now are gaining a competitive advantage due to the fact that they're actually still offering rate buy downs, and of course due to the fact we have a low supply of existing houses as well. It appears our market is highly rate dependent, so of course the data is ever changing, and of course real estate is local. The trends I share in my videos may not pertain to your neighborhood, your state, or maybe even your region of the US as well. I'm just talking about national trends, of course, right? Number 4, sellers and buyers have exited the market, leading to a dip of new listings and pendings, especially compared to the past several years. The lack of new supply of existing houses since last summer has led to inventory remaining at historically low levels. Again, down by about 50% from 2019. If homeowners continue to decide that now is not a good time to sell a house, that will limit housing inventory. The direction of our U.S. housing market, in my personal opinion, will depend on unemployment, rates, and inventory, and of course, the balance between supply and demand. And number 5, this is a big one. I appreciate you guys for supporting my YouTube channel and of course for watching today's video. If you guys are still watching today's video, I appreciate you. Hope you guys have an awesome day and look forward to seeing you on the next video.